Okay, so for this model, very simple. Number one, you need price to enter a 5-minute or higher fair value gap. It could also be a sweep of important liquidity. So, for example, the important liquidity, you have previous day highs, previous day lows. Um, you have session highs and lows. So, like Asia highs, Asia lows. You have obviously London highs and lows. So shit like that. Would be most ideal. Sometimes like even highs and lows inside of a fair value gap or around it. On bigger time frame like 15-minute or 15-minute to 4 hour ideally for the highs and lows inside of a fair value gap. And so the next thing you want to do once price enters your region you want to take a trade or your zone, you want to identify the main manipulation leg. And I'll show what that is in a minute. And then you take the biggest time frame inverse fair value gap within the manipulation leg, and it has to be the manipulation leg that took the liquidity. So biggest time frame meaning you're not going to take a 1-minute inverse fair value gap if there's a 2 or 3-minute inverse fair value gap on the same manipulation leg. At the break even at the most recent high or low. Um, and then or unfilled fair value gap. So the rules, you only take your entry from the 30-second to 5-minute time frame. So you only take it 30 seconds to 5-minute inverse fair value gaps. And the bigger the liquidity pool is, or bigger the fair value gap is, most likely the bigger time frame inverse fair value gap we're looking for. So you're not gonna take a 30-second inverse fair value gap after taking previous day highs. You'll probably take a 3-minute to a 5-minute. And once again, the inverse fair value gap can only be the manipulation leg that took liquidity. And then stop loss at swing high or low. So for example, right here for this example would just be the simple price comes at 5-minute Ohio fair value gap inversion. So you see right here, this right here is our manipulation leg. Okay, this is our manipulation leg. Why? Because this is the leg that came down and took liquidity. Okay, and then from this manipulation leg, we had a fair value gap like an inverse. You enter on the inversion, stop loss at this most recent internal high, or break even most internal high, stop loss at the swing low. Same thing for shorts. Price comes up, taps in this 5-minute bearish fair value gap. We get an inversion, stop loss at this intermediate low, or break even at this low, and stop loss at this high. For a liquidity example, price comes up to previous day highs. You then get a inversion on the biggest time frame on this manipulation leg. Manipulation leg being this whole leg right here. So that's the manipulation leg. Same way as this is the manipulation leg for this fair value gap, right? So you enter on the inversions, stop loss up here, at the break even. And this scenario would be here. And then let's say price for a bullish example now, price comes down, takes previous day lows or whatever, inverse fair value gap, stop loss at the swing low, break even at this internal high, take profit wherever. So that's a general rundown. Very simple what you're looking for. And then I'll show some examples of what will work, but just for shits and giggles, I'll try to find a setup real quick, and I'll go and show how I would find these setups. Come market open. Oh wait, shit, I can't. Okay, we'll go to just random days. I can't backtest. Okay, so we see on the hourly, we have this 1 hour fair value gap, 4 hour, nothing there. So I'll go to the 15-minute then. See any fair value gaps here? No. We do have this one, which isn't great. See this model right here. Okay, see right here, we have a low inside of this fair value gap. Okay, right, so we have a low inside this fair value gap. Price takes it. Okay, what is my manipulation leg? Well, my manipulation leg, this whole leg right here, from the from this up candle all the way to there. Right, this is my manipulation leg. So what am I looking for? Now I'm looking for a inversion on the highest time frame. Now we can see this is on the 5 minutes. So you would take your entry right here. Now this would be an entry I would take in real life, just because break even is right here. So like guaranteed break even. I mean guaranteed 10 points, so 12 points, but 100% break even. And if we look at a risk to reward, yeah, it's not good. But you still see it plays out just fine. Go to the 3 minute real quick just to show. There is also this 3 minute inversion, meaning you're not gonna take this 3 minute inversion. You're gonna look for the 5 minutes, right? Same way if we go to the 1 minute time frame, you're not taking this inversion. You're looking for the 5 minute. And technically speaking, if you look at models inside models, so right, time is fractal. Right here, manipulation leg. Okay, manipulation leg makes this 1 minute inversion. You can take entry right here, stops at the low, break even at this high, and then leave, take profit up here. Now this is valid if at the time there's no higher time frame fair value gaps. Meaning if that 5 minute or 3 minute fair value gap was not made at this time, then you could take it. And obviously this is now live chart, so I can't tell whether it was or was not. Okay, so it's okay. The 1 minute is valid. Because it's 3 minutes actually doesn't matter because we have to take a liquidity at the time. Let me see on the 5 minute if it would be valid. No. Okay, so if this 5 minute fair value gap exists before we get that 1 minute inversion, you do not take that 1 minute inversion wait for this 5 minutes. So yeah, it's just that easy to find a model, and to like prevent getting like stopped out or taking bad trades right here, right? Price comes in 15-minute time fair value gap. You can look for shorts if you wanted to, right? Go and see on the 5 minute if there's any inverse fair value gaps. Okay, right here, another one. 5 minute inversion. You enter shorts right here. Stops at the high. Take profit at this unfilled 5 minute fair value gap. This is what you do. Oh, a 15-minute fair value gap. Why is this valid? Oh, wait, actually, time frames is on. No, it's 15 minutes. Okay, this is not valid. Why? Because this was our manipulation leg. I mean, technically, this one was valid because like there's like stop rate and side fair value gap, but I've noticed if you take any trades that's not off the initial manipulation leg, it's just low probability. But let's deep this real quick. Let's see if there was something here. I don't know if there was. 3 minute time frame. Yeah, see right here, bang, another example. Right here, 3 minute inversion. Came down, stuffed this liquidity, tapped the 5 minute, would have been a winning trade. If, of course, if the candle closed like right here, or higher. But because the inversion candle already took out this liquidity, you want to take it. But now let's see if there was a long trade, right? Because now price came into this 15 minute bullish fair value gap. Let's see if there's a long trade here. And there was. You had right here. Not the cleanest, obviously I would rather if candle closure was like right here. But technically, still would have played out. Stops right here. Break even, take profit, whatever. Doesn't matter. But why is this valid? Because this is my manipulation leg that just tapped into this fair value gap, taking liquidity, and then we get a inversion on our biggest time frame afterwards from the, once again, manipulation leg. Okay, very simple. Now we'll see if we can't find any more examples. And this model works like without a bias or draw liquidity needed. Like I just showed you how to take a trade from right here, right? I showed you then how to take a short from here, so no bias needed for either or. And then price comes back down to this 15-minute fair value gap, and boom, another trade can be taken. Super simple. Like no bias, no analysis. Like you guys saw, like there's nothing there. I did. That was special. What was this? Our fair value gap. We could see if there was something, but I don't think there was. Okay. Notice how price did not inverse this 5-minute fair value gap. Now this is our manipulation leg, right? But price never inverses this fair value gap, so you are not taking trades there. Price did, however, enter this 5-minute fair value gap. Let's see if there was a 1-minute model. So probably a 30-second. I doubt a 1-minute. Yeah, I know 1 minute. Probably a 30-second though. But you wouldn't want to take this trade in real life. Just for the simple factor, like if this was a 30-second, 1-minute inversion to the upside, you wouldn't want to take that just because this is a bigger time frame fair value gap. It is a 1 hour fair value gap. There is a reason for price to go low to refill bigger imbalances. So you wouldn't take it, but it just shows that like even in bad conditions, the model still plays out just fine. Um, right here, we'll see. We'll find an example right here, maybe. Okay, no, this is a good example. Price, yeah, comes down into this 5-minute fair value gap, but we have this 5-minute right here. Okay, let's see if there's a 15-minute real quick. There is. Okay, meaning you would not take a trade at all because of this 15-minute fair value gap. Because our biggest fair value gap within this manipulation leg, right? Our manipulation leg is a 15-minute fair value gap, meaning you're not trading that shit at all. Um, right here, price came into another 15-minute bearish fair value gap. See if there's a model. Okay, so this is our manipulation leg, this low to this high. So let's see if there was a model. I doubt it. It might have been a 30-second, but you know. Okay, well I bet you there's a 2-minute, but I can't use 2-minute on FX replay. Okay, another good example. There is this inversion, which is a technical winning trade because price did come to this internal low. You will start to break even. Now you would also notice it's small, but there are two fair value gaps within this leg. You do not take shorts off this fair value gap, right? You take shorts at the bottom, right? The very last fair value gap. Same thing with a bullish example. You will not take, okay, right here. You will not take this long based off of this inversion, right? Why? Because there's a fair value gap right above it that could get respected. You wait for the very last one. And this concept applies bullish or bearish, doesn't matter whatsoever. But yeah, that's pretty much the concept. Draw out every fair value gap, 5-minute, 15-minute, 1 hour, 4 hour, and then you just wait for price to simply come to it and see, and then identify the manipulation leg, and then look for the highest inversion on whatever time frame. Like I said, you're only taking trades from the 30-second to 5-minute fair value gap, nothing higher. Another thing to mention, for me, the model becomes less probable slash less valid if it takes a lot of candles to inverse it. So meaning, meaning. Okay, so for example, like let's say the price came into like a 15-minute fair value gap right here. yes, price did inverse this fair value gap, but you're not taking it because of how many candles it took to inverse it, right? That's way too many candles. Ideally, you want to take your inversion within 1 to 3 candles, maybe 1 to 4 candles, after the inversion is made. What do I mean by that? Well, for example, right here, 1 candle inversion, right? As you see, a much better move. 1 candle inversion. Right here, look at how many candles it took to inverse this fair value gap, and then it still lost, right? It took one, two, well, technically, I actually took 1, 2, 3, 4, 5, 6. It took 7, and it failed instantly. Compared to right here, right? It took 2 candles, and it played out just fine. So you want your inversions 1, 2, 3, maybe 4 candlestick support. Normal. And yeah, pretty easy model. I'll show you some other examples real quick. And yeah. Okay. So this is example one. Um, no bias, right? Just drawing random fair value gaps, right? Following. So price came into this 5 minute fair value gap, right? And what we're looking for a manipulation leg to get inversed. So right here, manipulation leg got inversed. Take longs at the inversion and break even at this internal high and take profit at the sweep of this high inside this fair value gap. Very simple trade, very easy. As far as why did it take long at the tap of this 15-minute inversion, that's because my original manipulation candle never got inversed, right? So in order for me to take a long off of this 15-minute fair value gap, I need to see this get inversed, and it never did. So yeah, no bias, no analysis, just straight up looking for a fair value gap or sweep of some sort of liquidity, and I want to see that original manipulation leg get inversed. Okay, second trade, right? Nothing special. Um, First came into this 15-minute fair value gap, and we have multiple fair value gaps to the upside, which will be our take profits. So we see right here on the 3 minute that this whole move right here is my manipulation leg, right? This is my manipulation leg, meaning I want to say a inversion within this leg, okay? That is it, within this leg. We got a 3 minute inversion right here. And there's a couple ways you could take your profits. There was this 15-minute right here, which you could take your profits here, or this 15-minute up here, but nonetheless, you would have been at break even at the touch of this 15 minutes. Yeah, once again, simple trade. Um, no bias whatsoever. No analysis needed. Just tap into the fair value gap, new liquidity region, and you take the inversion off of the manipulation candle